Flip the page, it's time to start the game. Graham and Nathan calling out the names. Opportunities knocking loud and clear. The market's playbook is finally here. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, charts are lighting up the morning sky. They spot the trends with a hawk side. Options and plays in a live display. This is where the big plays are made. Oh, charts are lighting up the morning sky. They spot the trends with the hawk side. Options and plays in a live display. Every move counts in the game they play. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, step by step they break it down. No confusion, no spinning around. With every trade they set the tone, making big calls on their trading throne. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, this is where the big plays are made. Oh. Opening playbook, we're ready to roll. Daily moves that will fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh.
Good morning, everyone. Welcome to the opening playbook for Wednesday, October 15th, 2025. Happy Home Day to everybody. Hope you're doing well. Hope you had a good close of the day yesterday and are doing well this morning. Hello, Mr. Tucci. How are you?
Hello, hello. I am doing wonderful. This market is fantastic. It is wild, but I am having a lot of fun with it. I hope you guys are enjoying it as well. How are you doing, Dave?
I'm doing great. I'm having a good morning.
Good, 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 good. I hope everyone else out there is doing it as well. One of the questions that I had for folks, hopefully all of you got your overnight option hitting the target, even after a little bit of a slide there at the end of the day, which was kind of annoying timing wise. This market quickly made up for it overnight, so all good on the overnight option front. Give me a yes if you hit your target this morning on that one. But I'm also curious for the automated options, folks. All of you should be in the money there and hit your target as well. So we are kind of rolling right along here with a lot of our plays. And this is something that we talked about really all of Q3 and kind of going into Q4 as well, which is that we have an opportunistic market where, yes, we're very bullish, but we're going to start seeing some of the volatility very likely here that we're seeing right now. And just the question of how do we take advantage of it? Let's not pile in at the top and get super directional and aggressive, even though we are, bullish and all of that. but let's also, not shy away from the opportunity to make hay while the sun is shining. And so the best way that I think to do that is, to follow the mechanical strategies that we always talk about, swing the bat there. And then on the discretionary stuff, to do, a risk defined, outsized opportunities, like the ones that we've been working on here in the opening playbook. So I'm really kind of thrilled with where we are right now. Small caps up another 1.6% this morning, folks. So our pool, our Telegram pool, where I asked, will the IWM reach new highs by the end of the week? Well, confirmed. It only took 30 hours since then, or 25 hours since then, and we are at all-time highs. So if you want to close that position, you should be able to close that for about 85 to 86 cents right now. That's about 150% ROI on IWM. If you want to hold it and let it eat up a little more time decay, you should be able to get the full dollar for it by the end of the week. But I'll probably go ahead and close it. I'll probably set a closing order here right around 90 cents and see if I can get filled while IWM is way up at the top. Still holding on to AGQ. That one is rolling right along as silver picks back up today. And then if you guys took that meta position, that one's looking really nice as well. So looking good across the board here. Of course, easier to say on a day where the SPY's up 1%. But Graham, I didn't know. I was trying to update everyone yesterday because I think I don't always do the best job of updating all the different trades we've taken and where they're at. So I try to do a little better job. But I didn't know all of the ones that you had taken the last couple of days, especially Thursday, Friday, while I was out. So I don't know if you had any other ones to make note of. Of course, your CLSK position is just insane.
Yeah, we AMD from yesterday from the Apex up 26% overnight. AMAT yesterday, we did that seasonally up 20% overnight. Obviously, the markets are moving higher. CAN, which was my new Dave ticker, the stock is up 7% overnight. The options for me are up about 50% right now. They're a little less liquid, so they'll bounce around a bit, but that's that big speculative play there on CAN. BITF up another 7% overnight. Again, markets are moving higher, so that makes it easier, but it's been just remarkable with these stocks. Even when the markets were down, watching them go higher. This is all part of that melt up we've been talking about. I'm to the point where I'm wondering how much further can this go, but until then, I'm loving it. Right now, the new ticker, I posted this in Telegram. So if you're not in Telegram, please join there. It's free resource for you guys. Dave, my good friend Dave, he's got me all hyped up, but he was texting me last night about a new ticker. SLNH is a ticker. SLNH. Never heard of it before. I couldn't tell you the first thing about the stock, which is always a great way to start an investment. But Dave knows about the stock, and he said he thinks that's the next one to run. So we bought it yesterday. It's up 29% today.
Oh my gosh. Yeah, we're definitely gonna have to get Dave to come share his wisdom at some point, because he's on a run like I've never seen before.
Yeah, and Wreck-It Ralph, yeah, we just a little further today, and I'll make us happy. Now, if we keep all things in perspective as far as how much further can this thing run, I'm more so talking about these individual tickers that have just been squeezing higher and higher, crazy. All of those Bitcoin miners turned data center plays, and then also our new tickers like CAN and SLNH. They're just, the charts are insane. With that said, on the markets, we're actually still at a very, very good opportune moment to buy this dip. We are not yet back to all-time highs on the SPY, but we are bouncing back nicely. So hopefully our analysis over the last couple of days puts you guys right on track to take advantage of what I think is quite a good buying opportunity right now. And again, still in the midst of that buying opportunity.
Yeah, no, absolutely. And a lot of good stuff going on. We're gonna have Jeffrey pop on here today too. He's gonna walk you through a little bit of the behind the scenes of what he's been working on, which is pretty wild. I had him do a little bit of a breakdown on that. So lots of interesting stuff happening, and I'm still working on some things that I can't wait to show you as well. So you guys are in the right place. If you want to see some cool stuff, then I think you're in the right place. I mean, obviously we're super pumped about what Alex is going to bring to the table this weekend, something that we've had an inside scoop on for a while and had an opportunity. So yeah, definitely stay tuned. You're going to want to, I think, be very tuned into opening and closing playbook the next couple of weeks. Well, hey, forever. But the next couple of weeks as we kind of walk through some other things that we're working on, some things that we're seeing, and frankly, just to try to take full advantage of this market. I do think we're in a unique market environment. We've talked about this. Graham held that really important Sunday night about a month ago where he talked about the stars kind of aligning.
Yep.
And literally since then, we've had, a really slow grinding market turn into a more volatile, faster moving, exciting market. Gold and silver are up like 20% since Graham had that briefing. And so just, I'm not saying this to pat ourselves on the back, although I'm super proud of kind of how spot on we've been on some of this. We've also taken our lumps and been wrong a couple times too. I'm saying it because I think we are in a unique environment where people who want to take advantage, use discipline, make smart decisions can really do well. And so, just that's, I guess, my encouragement there.
Yeah.
You look at, go ahead, Graham.
Oh, I said it's just been a blast trading along with it too. Yeah.
As we look at today, you can see pretty much all of the sectors are up. Graham, I found it interesting that real estate ripping. I'm always hesitant to actually trade any real estate stocks. It's almost like if I'm going to do real estate, I'll benefit because my house is going up. I don't need to mess with the stocks. And there's not like a lot of great real estate stocks, but I know you mentioned Tool and a couple others that have done quite well. Do you have any thoughts on real estate relative? Like, because I guess my perspective is if we're going to get a really bullish run here, let me just stick with tech, communications, consumer discretionary, the stuff that can really rip, and let real estate take care of itself. What are your thoughts?
Yeah, I think that they're all in a good spot right now, but I do agree. I think real estate would be the riskier move of the bunch just because we have seen this housing market slow down, right? We have not seen an AI spending slow down. So
right.
The tech stocks are all rock solid. They have a ways to run. The housing market can be good. I think it will be good. Like the stocks like Rocket, RKT, that's probably an excellent buy the dip opportunity right now. So if you didn't get to trade RKT last time, take a look at it right now. It's actually a beautiful pattern on the charts. But with that said, I would put more faith in the AI plays over the real estate plays, but both can be good.
Yeah.
And I probably, to full disclosure, I probably have the most faith in the gold plays.
Yeah. Yeah, I would say so as well. I mean, if you look at GDX, since we talked about that one again 4 or 5 weeks ago, just unbelievable run we've had. But everything's moving up together, and this is usually a good sign of that kind of squeeze that we talked about, where it's more liquidity driven than anything else. You're not seeing just news come into play, although that obviously layers on top. You're really seeing buying across the board. Obviously, if I scroll back a little bit further here, this is where we got the dip. And we got the dip to different extents across different sectors. Then we dipped again overnight. And you just see these are like V shapes, how quickly buyers step in. And that's pretty much happening across every sector. This is not like hey, we're getting a big divergence here where technology and AI is turning into this bubble that's dragging everything up and everything else is slumping. We're really seeing most of the sectors do quite well and perform. Now, one that's performed really under is consumer staples. It's up today, bouncing today a little bit. And I'll talk about that in a minute. But for the most part, we're seeing a lot of positivity across the sectors. One thing that I think is worth noting, if you look at this is kind of an interesting thing. So this is over here, the VIX. The VIX is at what, 19 today. So our VIX trade is doing phenomenally well, by the way. And then over here is the scrunched up version of the SPY for the last 30 days. So 30 days of VIX over here and 30 days of SPY over here. Now, what I find a little bit interesting is that the charts themselves might not show you a whole lot. But if you look at where the VIX is, it's gone from 15 to 19. So it's had like a 25% up move in this period of time, a peak of maybe 30% to the upside. So the VIX itself has said, hey, volatility is increasing, 30% at the peak or 20% from, last, September 15th through now. Well, at the bottom here, I have the actual ATR of the SPY, and you can see 30 days ago, the ATR was at 0.5. And where it peaked out was actually over 2. So the actual ATR, the actual movement of the SPY, increased 150%. While at the same time, the VIX's highest run up here was about 30%. So the actual net movement up 150%, the VIX up only 30%. So what I'm saying here is I think we actually have more movement, more pace available to us than even like what the VIX or the volatility metrics would show. And so for me, I love this because it means that you can play like those, like what Graham would call an elite trade or what I would call a jump trade, looking for movement and direction while still paying relatively little implied volatility. You can still at the same time get a little extra cushion on the things that do have higher volatility. You know, your Teslas, your hoods of the world, most of the Mag 7 fall into that category. And so I just think it's a really good environment where you're getting lots of good movement, but the VIX isn't so high that it's making it difficult to trade options. That combination to me, I find very, compelling for market conditions like we're in right now. Now, I mentioned consumer staples. That's kind of the next thing on my list that I want to mention. So this is good old Pepsi. So Pepsi is a consumer staple that did really well on earnings a couple days ago. Let me see if I can pull it up here. So had a positive surprise, beating earnings, not massive, but, I think for staples, when people say the economy is weakening, they kind of priced in an under, an earnings miss and actually got a slight earnings beat. And you can see what Pepsi did. It had closed at 138 and we are at 151 right now. So it's like, what, a 15% move in the underlying stock in Pepsi. And so, Graham, this is one actually that JD mentioned to me. He mentioned if you want to look for like macro arbitrage opportunities, staples are starting to show in the earnings that they're going to do really well, and yet it hasn't really been priced in. And so just if you want to do the most direct correlation, check out Coke, which obviously did rebound some. It followed suit some, but it went from, 66 to 67.60 at the same time that Pepsi went up 15%. And they have their earnings coming up. So their earnings are on the 21st. And, you don't have to be a rocket scientist to think there's a pretty good chance if Pepsi beat that Coke has a good opportunity to beat as well and follow suit. So I found this as an interesting opportunity. And there's lots of other staples that I think are kind of, lagging behind. We have, let's see, what do we have? I had a list here. We have Clorox. We have General Mills, Colgate, Procter & Gamble. We have some that are performing well, like Walmart. As you guys know, I'm a big Walmart fan, and I think it's the best retail, stock out there. But I thought this was an interesting take that consumer staples is kind of sneakily lagging behind in an environment where we're seeing, a lot of liquidity, a lot of positivity, and people, looking for places to house money. Now, I will say, I think it makes perfect sense for staples to lag behind in this kind of aggressive melt-up environment. I think people are going to go with the top, the top performers. We're going to see the, tech run away if we do get, the full melt-up. All of that stuff is true. But I think something that's lagging behind, like Coca-Cola, that's, 10% off their highs and have a big earnings beat is an interesting correlated opportunity. So I'm going to give you a kind of pre-earnings trade on Coca-Cola here. This is a high-risk trade. It's basically saying, hey, if it follows suit and has a nice beat and does what Pepsi does, it'll be a really outsized risk-reward. If not, you'll lose, the relatively cheap option that you put into it.
And while you're doing that, it's actually funny you bring this up. I actually yesterday kind of wrote staples off for a bit as far as our swing tradings go. But on this earnings proposition you have here, it's kind of interesting. Staples is the second best sector, seasonally speaking, in October. And I wonder if it's that same sort of phenomenon we talked about previously. So maybe staples are the ones you want to know about in October for that very reason versus just our normal swing trading kind of guidelines here. You see staples. Again, I pretty much wrote it up. If I said I'm not going to trade staples right now, but 2.4% outperforms the baseline S&P by about 80% increased returns.
Yeah, that's pretty significant, especially for staples, because this is just a true apples to apples percentage, and you're comparing staples, which typically move slower. So
Exactly.
it's almost like an inflated number there in comparison. And there are, by the way, a couple ones, like I said, starting to move. We've seen Walmart. I mean, here, let me show you Walmart real quick if you haven't seen it. There's my baby AMD. Come on, keep going. We've got Walmart. I mean, look at what Walmart looks like on the daily chart. So we're definitely seeing some of these really pick up. By the way, the other trade that we can take is cost, because if it does what Walmart does, it also is an extremely outsized potential. So we'll do both. We'll do Coke and Walmart. So let's get over to Coca-Cola. This is going to be the 24th. So you can see this is going to be right after earnings. Now there's a kind of a fun little trick that I like to do with pre-earnings trade. If you have, a week to 2 weeks before an earnings trade and you're doing a spread like this, one of the fun things that you can do is you can take an out of the money trade on something like Coke, like we're about to do here. And if on October 20th, before earnings, you're already up 80% on it, you just take your profits. But if you're not up on it, then you let earnings try to, flip it from a loser into a winner, or from a break even into a winner. So you almost have like two chances to win the trade. Does that make sense to everyone? You have two chances to win the trade. You have, will it run up before earnings? If so, I'll take my money. And if not, then I'll use earnings as kind of a coin flip trade to try to win on a trade that wasn't winning up, to date so far. So that's kind of like a fun little thing that you can do with earnings if you actually do like the stock and you think it has a chance both to go up before earnings, which I would say Coke definitely does, and if it has a chance to go up on earnings, which I would say Coke certainly does as well. So we're at $67 right now. Now, guys, I'm going to give you a super aggressive trade right now on Coca-Cola. This is not going to be like a high probability earnings trade. If you want to do a high probability earnings trade, I think you could do a wrap order. And I think Coke would be in great position to win on a wrap order. That would be like a 67, 68, probably right around a 55, 60 cent trade, 58 cents there. So if you want to take a high probability one, you would do the October 24, 67, 68. That's almost a perfect wrap. It's a 65% of the way to 68. So not a perfect wrap, but pretty close. And I actually think that's a pretty high probability trade just based on where the market is, where staples are, all of that. What we're looking for is something that comes close to doing what Pepsi did, which Pepsi did like a 15% run. So we're actually going to look for close to a 10% move here by going all the way to the $73 strike. Okay, so this is like a crazy out of the money. We need Coca-Cola to go up 10% to get above our line in the sand. Now, the fun thing about this is you could probably get filled for like 4 cents on this trade. So on someone do the math, it's like a 2,000% ROI on Coca-Cola. Now, the reason I'm doing this is because I can trade it for $200 and make, a couple grand if I'm right. I'm not risking a big chunk of money on a super aggressive trade. I'm risking a very small chunk with an outsized return. It goes exactly back to what I was saying before. In these really aggressive market conditions that I think are phenomenal, what I want to do is I want to trade the mechanical strategies that have a good edge with my, my normal size capital. And then I do want to take some swings at bigger wins, but not by putting a whole bunch of capital on the line. And then if I'm wrong, wiping away all of my other wins. I want to do it with risk-defined small capital that if I'm right, can be really outsized. Okay, so hopefully I've given that spiel enough in the last couple of days that all makes sense to you now. But this is a super, super aggressive trade for October 24th here. Let me just go over to Coca-Cola real quick. Again, here's our earnings before the bell, October 21. And then here is the 24th right here this Friday. So you can see we need to be not just here, not just here, not just here, but all the way up here. This is a crazy move for Coke to make, just like it would be one of the, the big earnings that we've seen. So that's what we're going for. I just want to be super clear on that. Just a crazy fun trade. And then we'll do a more realistic trade on cost with the idea that it can follow suit on Walmart to some extent. So here it is. Buy to open. Make sure you use a limit order on this. Don't pay the full 10 cents or whatever that natural price is. You want to use a limit here. Buy to open October 24th. KO $72 call. Sell to open October 24 KO 73 call. And like I said, one of the things about this trade is that you could, if it's October 20th and Coke is already up, 2% on the underlying 3%, this trade might already be up a double. It might already be up to where it's worth 10 cents. And you could literally take some of your contracts off and make a double on that and then go risk-free into earnings, for example. So let me do 50 of these guys. So I'm going to risk, guys. I'm going to risk. Let me actually go down on my debit here. There we go. I'm going to risk $250 to make $4,750. Okay, hopefully that puts in perspective how crazy we're going here. We're going for like a historic beat and move on Coke. But like I said, the fun thing is if we get a little run before that, we might even be able to get half of our contracts out at a double up and and run from there. So let's also take a look at cost. Remember, here's cost. Let me just go back a little bit. I'm on the daily chart right here. From the highs, we're down about $100. So we're down about 10% from the highs. If I go to the weekly chart, you can see it maybe a little bit more clearly. Pretty severe pullback. Tried to make a rally to new highs, came right back down. We're sitting above this $900 baseline that it came, and it's looking like it wants to build back. And here is cost cousin, Walmart. Everyone see the difference? Same move, right? Same move down. Tried to make all-time highs and got rejected in a similar way, but boom, it reacted and is now at all-time highs. And I wish that I had bought more Walmart when I said that I wanted to a couple weeks ago because it's been on an absolute tear. So there's Walmart. There's cost, lagging way behind. Now, of course, you could trade cost to all-time highs as well if you wanted to go crazy, like we did on Coke. But I'm not going to do that. I'm just going to trade for cost to make a comeback here in the next couple of weeks. Just, okay, can it follow suit Walmart? Let's see when earnings are. They're not until 12/11. So we've got almost 2 months to work with in terms of time for cost to make a rebound and do a little bit of a catch-up trade there to Walmart. So let's go to cost, and we're going to go before earnings on this one because this is definitely not an earnings trade. This is just a catch-up. This is a follow what Walmart is doing. And we can go to, let's see, November 28th is going to be our closest expiration to make sure we're in before earnings. That's 44 days. So it's about a month and a half. Okay. So in about a month, this is the weekly chart, about a month and a half, we're going to look for some follow through. Now, if you see, even though cost is stable, it makes some moves. I mean, this is April. We went from $890 in less than 2 months to over $1,000. It's about a $150 move. Here in January, we went from $916 to $1,078. It's a $150 move in less than 2 months. So certainly cost has the ability to make that kind of move. We're not going to go for that aggressive move. We're going to go for something much smaller and go for that $1,000 level, which is about a $40 move. So we're going to give cost 44 days to move $40. Something that cost can easily do. It's up $13 in 1 day today, just for example. So go to the November 28th. That's the expiration. And then just scroll all the way down to our $995 $1,000 strikes because we want it to go up over $1,000. Wow. You've seen wide spreads, and then you see this. Negative 47 cents is showing up as the mid price here on cost all the way to $295. So let me just see if we have way better options here on the monthly. We could maybe go down a little bit and get some more volume. Let's see how we look if we just go to $995. Yeah, we probably have. Let's check the open interest here. We have 243 on the monthly. We probably have 0 on the weekly. Yeah. All right, let's do the monthly here since we're live and there's hundreds of you in here. Let's not trade the ones with 0 open interest. We'll just move our strike down $5 and do the $995. Actually, let's move it down $10 because that is a whole week less. Let's move it down $10 and do the $985, $990. That's still going to be over 200% or just about 200%. And we'll get a little more volume. See, we have a little more open interest on that one. So you guys could go higher. You could go for the $995. You could go for the $1,000. Obviously, the higher you go, the more risk reward. I mean, you could even go to cost and say, listen, I want it to go above, 1,050 and get another super high aggressive trade if you want. I'm going to go for what I think is a pretty reasonable move here. This is about $30 in cost for the next 37 days. So let me give you that one. Buy to open. This is the November 21 cost $9.85 call. This is the sell to open November 21 cost $9.90 call. And the debit here, don't pay the $2, use a limit order. Try to get into this for like $1.80. Okay, you might even be able to get in less. Be patient. Use a limit. Start at 170. Crawl it up. I'm going to start here all the way down at 170, and I will crawl this trade up. Risking 510 to make 990 if I get in at that price, almost a 2-to-1. Oh, wow, it filled at 170 instantly. Should have started lower. See, that's why we use a limit order. Did you guys see the mid price there? Hopefully everyone caught that. The mid price there on cost was showing $2. I filled instantly at $1.70. That's why we want to use limit orders, and that's why I always try to start low and crawl it up. I should have started lower. Very obviously there because it filled at 170 instantly. So start at 160, crawl it up, try to get the best fill you can. When it comes to a debit spread, guys, don't forget, in a debit spread, your max profit is capped. Okay, you can only make the remainder of the spread. That means every penny you pay more hurts your risk to reward at a higher rate. It counts as double, right? You're paying a penny more and you're losing a penny of upside because of the spread being capped. So anyway, good lesson there that I didn't go low enough to start my crawl up. Now for these guys, I'm not going to use a target. Like I said, let's remember our crazy fun Coca-Cola trade. We're going to wait for October 20th before earnings. If Coca-Cola has already moved in our favor, we'll take some profits off and take advantage of the fact that it's going to be able to shave off some profits that we can go into the earnings risk-free. If it's not, then we will. Oh, cost and cast. That would be a heck of a spread. What is cast? I'm sure that's a real ticker. There you go. Of course, don't pay 180. Like I said, as a matter of fact, let me just edit it for you. Try to pay 160. Crawl it up.
Cast is how Jeffrey Termeyer catches his dinner.
Perfect. Definitely how Jack Carter catches his dinner. We know that. Yeah. So. Wow, I don't even know where I was going with that. Oh, Coca-Cola. We are going to manage it before earnings and then after earnings, like two separate instances. Okay, hopefully everyone caught that. It's kind of one of the things that I like to do with earnings a lot. If I have a trade going into earnings, I'll take profits if it's already up. If it's not up, I'll let earnings try to bail me out of the trade. You almost have like two different chances to win that position. Cost, I'm not going to manage either. With the target because it's a couple, it's 37 days away. Like I always tell you guys, I like to use time in those situations. If cost bounces 5% on the underlying stock tomorrow and that debit spread is up 100%, I'll take it because one day and 100% ROI is worth it to me when I was planning on trading it for 37 days. If cost is down 5% tomorrow, well, then obviously I'm going to need some more time and I'm going to hold on to it. So I would manage it like most of these discretionary trades where we're going to give it a little bit of time to make that move. So this is an interesting one. You guys know I've been trading mostly tech, some communications, obviously the Mag 7 in general, a lot of gold and silver, things that I think have high upside. But I thought that, the staples are a little bit of an arbitrage opportunity like JD mentioned, where we could see some winners in the next little while. So looking forward to see if we actually get some follow through on those. When you say how many percent for KO to close, I'm not exactly sure what you mean. If it hit the target, it would be like 2,000%, which obviously we are not expecting that. But if we are like up 100% before earnings, I'll probably take half my contracts off, if that answers the question. I think that's what that question was alluding
Either
to.
that or what percentage move in the underlying. That could be the other interpretation. I don't know.
Yeah, it's a massive move. We need a 10% move in Coke, which is like, asking a freight train to go from 0 to 60 in 3.5 seconds. So we're asking for a lot on that position.
It's they retyped 50%. I'm thinking maybe they're looking for a target. As Nate said, right now he's not setting a target. He's going to wait and see how it moves. If it goes to like 100% in days, then he'll get out of it. If not, we'll give it time.
Yep. Correct. Okay. Cool.
We have a
Well,
guest. We have a guest at the door.
We do have a guest at the door, and he has lightning, protons, neutrons behind him.
That's actually a live picture of his brain.
Yeah. So
It's my new world model. Have y'all not heard? This is the new thing in AI.
That's it.
we expect you to know those things, Jeffrey, not us.
Yeah.
And yes, someone asked, can you do those trades in Robinhood? Yes, you just have to have the right permission. So any broker can do a debit spread, but you have to have the permissions to do a debit spread. If you don't know about those, I'm sure Dave has the thing in the announcement that walks you through how to get the appropriate permissions and all that sort of stuff if you want to scroll down and go through that. But if you guys have been paying attention to anything that I've said recently or anything any of us have said recently, you probably have some hint on what Jeffrey has been working on that we call the Cash Bot. And this has been a pretty cool project to watch come to life. And so I asked Jeffrey two things. Number one, can you give people a little bit of insight kind of behind the scenes? What went on to build this? How does it actually work? Why does it actually work? And then number two, of course, can you give everyone an opening playbook a chance to take advantage of it, to do our special offer, which I'll just go ahead and seed and let everyone know there is a special opportunity that we have during, kind of this first week when we bring things out like this. Can you give everyone a shot at that live so you can answer questions, go through the whole thing? But first, Jeffrey, why don't you kind of just show a little bit of behind the scenes that I don't think anyone else has really got to see yet?
Yeah, I mean, your publisher, Nate, when we refer to you, and you've got a heck of a price on this thing, and we've got it shaved way down for opening week here. So I just want to give everybody a simple intro to this thing, CashBot. If you haven't heard about it, let me know in the chat. Even if you have heard about it, let us know in the chat. If you're excited about it, or if you haven't heard about it, let us know right now. I'm going to walk you through kind of what it does. And it is, a lot of people are like, all right, I've heard it. I've seen the advertising. You guys have blitzed it out everywhere. But what the heck does it even do? So I've kind of outlined it right here. This is what we're going to go through. This is, I'm going to tell you what I'm going to tell you. Then I'm going to tell you. And then I'll tell you what I told you. It's kind of the military way, right?
Perfect.
So what does this do?
That's what my dad told me he's supposed to do in sermons as well. So this is a universal truth. Tell him what you're going to say it, tell him what you said. So you're, all so the vein.
A lot of people want to know what the devil this does. So right here today, we're going to go through how it watches the chart for my signature technical pattern, how it identifies an ideal bullish entry setup, and then how it searches for ideal options to play with that, how it loads up my alpaca brokerage, gets live pricing data, and then sends those alerts in plain actionable text. And we're going to break down a trade and kind of show the in and out of the whole thing. Does that sound good to everybody? That's what we're going to do.
It does sound good, except for the part where you said alpaca, because I spent about 2 days trying to do something with it and I gave up because I'm not as smart as you. So for everyone else, I can testify ahead of time that you'll probably think this is really cool, but I wouldn't try it at home if your experience is anything like mine.
So starting out with the signature technical pattern, this is my roadmap bounce pattern. We sell this orange line for $5 whole. You can, it's available all over the place. It's a support resistance line that shows up on the chart. What's it based on? It's based on 2 EMAs. And it's really simple. I give you the code for it on my YouTube channel for free. But if you don't want a code, you can click $5. If I pay $5, click it, put the easy button on your chart. But that doesn't get you entries and exits. All it does is get you the line, and you have to do all the work yourself, which I've gotten to be busier and busier as Nate puts the screws to me to put out more content. And in case anybody didn't know, Nate's kind of like, my, for lack of a better term, boss.
Wow. Jeffrey, it seemed like you really struggled to say that out loud, I have to say.
Well, I couldn't think of a better word for it.
He just wants to make sure it's really nothing to do with you. He wants to make sure his wife didn't hear.
I do call her the boss.
Yeah, true.
She currently holds the title and doesn't want to give it up.
Yeah. So this thing, I've created an algorithm that hunts for this pattern. It looks for these highs, looks for this low that's bouncing off of this orange line, And, I've started implementing it into trade alerts. Now, here's where the entry is. And this is the hard part to find yourself. Like, you have to go check every candle close and look for this entry. But it's way easier if you have an algorithm that just tells you, hey, the trade's ready to get into, right? And then it goes and looks for options. And there's a lot of options, literally. I mean, that's true, right? There's a lot of options. How do you play? How do you pick one? And, my first iteration of the algorithm I came out with last year, I kind of gave some guidance, but that was tough. That's a lot of work. People wanted it faster, easier. Can the algorithm just do a little work for me? And that's where loading up Alpaca came in. And, as Nate said, this was probably not the easiest way to go about it, but it worked for me. I understood it. I've kind of been using Alpaca since the first version of the algorithm last year. And, this new iteration loads it up, grabs live price. It actually creates a live order in the options market at the ideal place. And it searches through a lot of data. And we've done a lot of back testing in the last few months to try to optimize this. We took my algorithm, we took my 100% win rate strategy, we kind of crossbred those. It utilizes some credit spreads in a unique place in the market, that 100% win rate thing. This Alpaca thing, has live data. The bot kind of pulls up a whole bunch of options, looks for the best place to place a short-term credit spread, does the risk reward and everything for you, and then pumps out an alert that looks just like this. This is not today's. This is, this expired yesterday. This was from 2 days back. It kicks out, sell this put at this price, buy this put at this price, get a net credit of this. And this is live prices, so it may change by the few minutes before you see it, but it gives you these live prices. Now, we did a lot of back testing in the background. We called on our German friends that do a lot of back testing, and they ran a whole bunch of numbers, a whole bunch of scenarios, and came up with where the ideal place to place this is for the best profit factor. Now, profit factor, in case you don't know, that's the dollar amount that you'll gain for every dollar that you lose in a trade. We've kind of optimized the profit factor here over a large amount of data. Why this, why that? I've had some questions from people that have joined. What can't I just do this? I always like to do that. You can, but we have optimized with the alert that comes out right here. We've optimized the profit factor across hundreds of trades, thousands of trades.
And Jeffrey, it's always that optimization came down to always being 0 DTE, right?
It's 1 day to expiration.
Okay, one day expiration.
1 day. So we're not trading. Okay. We're trading 1 day out. So when this alert came out, it was the 13th.
So that was the 13th alert. Got it. Okay.
This was the 13th. 2 days back, for the 14th, yesterday. So you got 1 day. It's not 0 days. It's not day trading. We're going for 50% of the net credit as the exit. Why 50%? Because our German backtesters ran lots of scenarios and found the best profit factor if you closed at 50%, not 55%, not 45%, 50%. That's where you made the most money over the long term. All right. And even our the copywriter who wrote our presentation, he was like, I think they're wrong. I'm going to go for 90%. And he quickly found out that you take more losses and it eats away the profit. It's just just one of those funny things that, like, the numbers show if you go for a 50% profit target, don't get greedy, don't undershoot with like, I want to win more. I want to just go for 20%. You're going to make less money. We optimize the whole thing. Like, I can't tell you how much math went into this. So 50% profit target, it's already given for you. So you put this order on for this much credit, sell this option, buy this option, get this much credit. That's the order. Once you get filled, you put on this order to close it for 22 cents. Your risk is all calculated for you. It's 57 cents per option. If you wanted to do $1,000 risk, that's 17 contracts. Your return
I think that's
on risk,
one of the cool parts right there is that, that's one of the questions we get constantly. Oh, how many contracts? We say, well, I can't tell you how many contracts to trade for your account. Okay, but how many for $500 risk? How many for this amount of risk? Well, now you have a baseline. Hey, here's how many contracts for 1,000. If you want to risk 500, do 8. If you want to
Yeah,
risk
cut it in half.
250, do 4. Like if you want to risk $5,000, then do whatever 17.
Multiply it by 5.
whatever that number is. I think that's one of the cool like unsung heroes of this whole thing is that you don't have to guess the relative risk as soon as you see the alert.
Yeah, if you want to do the minimum size, do 1. Like that's it's so yeah, net credit. That's what is this? A net credit. This is a credit spread. You're going to sell the higher strike put. You're going to buy the lower strike put. You're going to get more credit when you sell it. You're going to get less, debit when you buy this. You're going to get a credit to get in the trade. You're going to close for half of the credit, and you're going to let it ride. This is not 0 day. It's good for 1 day. 90% of the time, it's shown to close out in the good. And there's your return on risk if everything works out just like it's printed right here, which it does like 9 out of 10 times. Pretty sweet. So this is what it looks like right here to get it filled. I actually didn't get the 43 cents. I got a little bit less because I don't try to front run the clients. I give you a little bit of time and I get in later and get a worse fill. And that's just part of being a guru. I don't want to be accused of front running anybody. Then you set up the exit order, right? Like that, net debt, half the credit. I got 30 cents credit, put in the order for 15, half of it. And this is what we're taking advantage of. This is what happened during this trade. Here's where it came out on the 13th. That was the pattern I showed off in the first slide. Price went up a little bit. And then yesterday morning, we came in to a big down. And some people were like, I don't think this is going to work out. In fact, I had a couple members close it right at the open. I was like, I'm just going to let mine ride. And guess what? The market recovered. And it closed out right here about noon yesterday for the full profit right there.
Well, and one of the things, if you go back to that chart real quick,
Yep.
Obviously the pattern, we know the data on the pattern, how good it is. Well, you got news in the middle of that pattern. And so kind of disrupted it, but it's still won. Whereas if on that pattern, you did an out of the money call option, well, you're going to lose even with that recovery on the right side of your chart. You're not going to get, enough of a directional move to make
if you're
any
looking
money.
if you're looking for the same profit, on a call that's up here with the same kind of risk, we never went higher. So that would have been pretty much a 100% loss. And this probably still would have been a 100% loss. And we never went higher over here into the end of the day. We actually sold off a little bit. So directional call options, that's tough. Even debit spreads, that's tough. So we found that this trade gives you a little bit of downside protection and still wins if you just give it a little time to cook, as our friend Jack Carter says. And that was my exit right there. This was a real live trade that I got out yesterday at 12:43 p.m. Right there, half the credit, closed it out, held it overnight. One of the new members was sweating holding these overnight in this volatile environment. These big gap downs, it scares me. I don't. Cool, skip it till we're in a more stable environment. But these have shown the power to work. We've got the backtest data that goes through Liberation Day, all the chaos coming out of the back of Liberation Day, all the tariff announcements all summer long, and then this too. So this is kind of how it all works, in and out right there. And it's a defined risk trade. This was the example I brought to show you how it kind of takes advantage of this little price pattern here. Price didn't really go anywhere, but it still worked out. So any questions about it?
I'm sure there are a couple of questions, and the chat's a little bit delayed, so they might pop up. But first of all, thanks for kind of going behind the scenes, because I think a lot of people know, hey, it spits out automatic opportunities. There's kind of a pattern. They know bits and pieces, but the step by step, I think hopefully gives people light. Like this is how a kind of mechanical system can actually work. You have a pattern that works. You have the technical structure to make it. You optimize it for what the actual best performance is, and then you trade it live and you see if it works. And so those are the real steps that are happening here before you get something like the cash bot that then is now printing out lots of winners, you kind of get that process behind the scenes. So one of the questions was, how easy is it to get filled? Well, you're trading the biggest assets in the world. So the volume is definitely going to be there, especially one DTE where they're going to, have massive volume within the next couple of days.
Yeah. And a lot of people are like, how easy is it to get filled? These things have, this is QQQ, SPY, and IWM. That's the ones that have everyday expirations. They're always 1 day to expire. They're always tomorrow's expiration. So you don't have to get into that 0 day, freak out. I got to get in like right away because of the time decay. We've kind of optimized this, not too fast, not too slow, lots of repeatable, high win rate. And it's just been working. I mean, it's just so.
Hey, Nathan, you probably want to take this one since you're familiar with both. Somebody asked the difference between this and Lance's 4 p.m. payouts, which are obviously 0 DTE, but other than that.
Yeah, I mean, quite different. Obviously, both income approaches, but Lance is doing a market maker move based thing that happens once a day on the same ticker. There's no pattern. There's no technical analysis of any, like, other than looking at the VIX. Like, no, not a real mechanical system from a directional standpoint. It's more a mechanical system like from the math standpoint, like overnight options or something like that. What Jeffrey's doing, he's actually leveraging the pattern that he's been using for the last decade and then combining it with that income concept to get what we get out of the cash pot. So what you have is that income advantage that I think we all like, but you're combining it with a high probability pattern. I think that's really what's unique and cool about it. And it can trigger once a day, twice a day. It could technically trigger, multiple times a day. There's lots of different, scenarios here, but they're all going to be fed to you, kind of silver spooned to you as soon as they trigger, versus, like a time-based system where it's going to be like, hey, open it at 9:30 and close it at 4 p.m.
Yeah. And I created a custom version of the, it did take the Apollo code. For those that don't know, Apollo's my original version of this algorithm. And I created a version that's Apollo ACS, which is Automated Credit Spread Finder. And, right here is the entire history that TradingView has for IWM on this time frame. It wins 81.37% of the time for the last 25 years. Already, that's the price pattern. So we're taking that price pattern and upping the win rate
and putting a structure on it that's going to increase the probability. Yeah.
So this is not like we just played around with something that works this year. I did 25 years worth of history on this trade to find something that was stable. We've had everything in the last 25 years. .com bubble, bust, great financial crisis, COVID, all the shenanigans this year. President Trump 1, President Trump 2, Biden, Obama. I mean, we've had everything the last 25 years.
I mean, that's even before Nathan was born. So it's a long time
Nathan
ago.
and all his kids, right?
Right.
But it's still 81% win rate on IWM. And then we take that and piled on a credit spread, which, lets you win if you're right, if you're, kind of right, and it just kind of floats along, or if you're slightly wrong, it goes against us. Like we got the gap down yesterday, but it came back up, but it didn't take off and go exponentially higher, and we still win. So we up that, 9-10% of the time that we might lose, and added that on with the credit spread trade.
Yeah. Well, I think it's awesome. And I think what you did to automate it and make it easy for people is actually probably the most important thing. It's cool to see kind of what's behind the scenes, but as you and I have talked about on numerous occasions, for our students, what we see the most success with isn't necessarily strategy performance alone. Obviously, you have to have a good performance on the strategy or else nothing else matters. But the things that people are actually able to trade, that are easy, that are handed to them and made easy, I think is really as big a part of the equation as anything else. So I think that's super cool that you made it as easy as you possibly can in real time, the exact credits. I mean, not like, hey, find a credit spread because we got a trigger. No, here is the credit spread. Here is exactly what the credit should be available to you, handed right over to you. So I think it's awesome. I'm excited for people who haven't had a chance to do it yet to start trying it out today. I mean, we could get more signals by the end of the day. So that's one of the fun things about it. It's like, you could get 10 opportunities in a week. You get 3 opportunities in a week, but as long as they trigger, they're going to be sent directly to you. And when the market is good, you can really have the chance to pile up a whole bunch of them, which, I think right now the market's pretty great.
And I'm heavy in statistics. I'm an engineer, and the profit factor on this baby is 2.24. Somebody in the chat I saw, don't let your losers eat up all your winners. Well, we optimized for the profit factor here. And 2.24, that means you lose $1, you're going to make 2.24 back. And this is on 286 trades so far. So it's not like 30 trades, a minimum little sample size. This is a pretty big sample size. I know you've been talking about, I came on here last week, we were talking statistics a little bit. I took engineering statistics in college and a variety of other statistics. Liars use statistics, but statistics don't lie. So if you do them properly, which Scout's honor, I'm trying to be as open and honest about the statistics as possible here. We took an 81% win rate and cranked it up a little bit. It does trade SPY, QQQ, and IWM. I only showed you IWM's history, but we take that win rate, crank it up a little bit by using the optimized credit spread. And I built this tool for me. Quite honestly, I'm so busy, I can't go search the trades. So I built it to give me exactly what to do. So I can just click in the trade. And Nate was like, hey, this is a pretty cool tool. Why don't you offer it for people?
Yeah. Well, I mean, I think it's awesome. Like I said, making it easy, giving the exact trade. And if you guys don't know a lot about like the testing stuff, a profit factor over 2 is insane on something super short term. So a profit factor of 2 is great anytime, but it's a lot easier to get a profit factor of 2 if you're trading like a monthly breakout that gets 6 signals a year. Then you can really pile up kind of that net risk reward. Trading every day, multiple times a day, and having a profit factor over 2 is actually like crazy. I mean, if you guys haven't been in the weeds a lot, maybe you don't realize that, but it's crazy. So anyway, awesome. Thanks for showing us behind the scenes, Jeffrey. Why don't we flip over, walk them through the entire presentation, exactly how it works, the details, and then run through the special offer that we have. That, as far as I know, we haven't shut down any of the best prices yet. So I think everyone in Opening Playbook today, if you're here, still has a chance at the absolute best price if you want to take advantage of that.
Let me throw this over here where we can see it, and I think David's going to read through this with me.
Yeah, absolutely. So we develop tools and strategies to be the best of our ability. No one can guarantee the future. There's always a risk of loss when trading past performance is not indicative of future results. The trades are shown from a back test of 279 trade signals this year. The result was an 89.9% win rate, 12.7% average return. That's with winners and losers combined, with an average hold time of less than 48 hours. Every trade shown targets roughly $250 in income based on a $1,000 risk, unless otherwise stated, although you can risk more or less if you'd like to. We cannot guarantee any specific future results, as there is always a high degree of risk involved in trading. See our terms on the Prosperity Pub homepage for more information. But let's be real, there will be losers in trading. There is no black box miracle system that prints out winning trades automatically. The whole purpose of Jeffrey's research and work with traders is to help give you folks an edge in the markets. If you can't handle a losing trade, then you really shouldn't be trading with real money. And again, losses in trading have occurred and will occur again. So for those that don't know me, I'm David Mound. Thanks for being here today. I promise it will be worth your while. This is real exciting stuff. Today, you're going to see a breakthrough that could change the way you look at trading forever. It's a new way to target what my special guest calls high frequency income. I'm talking about placing one high probability trade when the signal hits and watching as the trade automatically closes out, sometimes just hours later, targeting right around $250 on each trade. Now, unlike most income strategies, which take days or weeks for the trade to play out, he says this one isn't a once in a blue moon type of opportunity. Not once a week, not even just once per day. Thanks to a fully automated trading engine he'll reveal in just a moment, we get a shot at a high frequency income trade up to 3 times per day. Like what the research shows on Monday, September 15th, Most investors would have made a penny on a flat day like this. But anyone taking advantage of this new technique could have cashed in not once, not just twice, but 3 separate times that day. High frequency income trade number 1 would have made $214. Trade number 2 would have been $231. And trade number 3 would have been 306 buckaroos. Altogether, that could have been an extra $751 in high frequency income. And that's just from one day of alerts. That's crazy stuff. Imagine how that might stack up after an entire week. Now, before you start guessing on what today's opportunity is all about, although we did give you a little bit of info before we started, let me assure you that this has nothing to do with risky directional trade, day trading, where you're frantically trying to guess which way the market might go. You don't have to be glued to your screen all day, babysitting the trades. And it's not another one of those too good to be true gimmicks promising outrageous returns. What today's opportunity is about is targeting reasonable returns in a short amount of time and doing it over and over again. Because as you'll see in just a moment, when we're able to stack up win after win while limiting the losses, good things can happen in your account. For example, like what would have happened at the beginning of July. Let's say someone started with just $1,000. And of course, you can always start with more, however much you want. But based on $1,000 start, Monday, July 7th, you would have earned $141. The next day, 2 opportunities, $535. Wednesday, another $157. Thursday, another $142. And Friday, not 1, not 2, 3 opportunities totaling $650. All in all, anyone could have pocketed $1,628 on high frequency income without a single setback with just $1,000 start. And while $1,600 might not be life-changing money, that's extra cash that could have gone towards the groceries, the mortgage, the savings account, from clicking a few buttons each afternoon and watching as the positions automatically close out by the next day. Now, of course, I want to remind you, not every trade will be a winner. In fact, losers are part of the game too, so never over leverage yourself with too much on the line. That would be a recipe for disaster. But here's what takes these high frequency income opportunities up a notch. Thanks to a timed advantage buried deep in the options market, these income opportunities are specifically designed to pay in all sorts of market scenarios, even when the price falls below our entry point, meaning the market can go up, stay flat, or even go slightly against us, and the trade can still work out. That's incredible. So allowing us to trade with an incredibly high hit rate while getting maximum bang for the buck. For example, take a look at what would have happened during the next week in July. Trump's tariffs were back in the news. Heard of tariffs this year? I think we have. And uncertainty was creeping back into the markets. He threatened a tariff blitz on 14 countries. And yet again, you could have tuned all of that out, pretended it didn't happen, and instead tuned into these high frequency income opportunities, using up only a few minutes each day to take advantage of them, probably less time than you spent looking at the news about the tariffs. And let's say someone was confident and started with 2K. How far would they have gone that week with 2K? Well, Monday, the markets went up. You made $794. Tuesday, we didn't trade it, which is a good thing. And Wednesday, markets dipped and recovered, and you would have made another $996. Thursday, markets rallied, another $858. And Friday, markets opened higher and sold off. But that didn't matter one bit. Still made $590 in a sell-off Friday. Altogether, that could have been another $32.20 hitting the bank for us, following along automatically. Now, an extra $3,000 in the bank might not sound massive to you. For others, it might be a drop in the bucket. But either way, it's a needle-moving amount of cash, all while limiting downside risk as well. So if you're looking for a new way to trade, one that doesn't require a ton of effort, but has shown the power to pay almost every day, then look no further, because the next few minutes, my special guest, Jeffrey Turnmeyer, is going to walk you through exactly how these high-frequency income opportunities work, the new trading tool that makes everything from the entry alert to the exit fully automatic, the timed advantage within the options market that helps these trades hit with an incredibly high win rate, plus invite you to take the newest trade alongside him this very week, targeting right around another $250 on each and every one with a small $1,000 investment. Everyone, welcome my good friend and expert trader, Jeffrey Turnmeyer. Now, Jeffrey is no rookie when it comes to trading. You know him as the man who always gets lucky with his big predictions. Well, it's not really luck, folks. Like back in 2022, when the Fed was raising rates at the fastest pace in history and the market was falling fast, Jeffrey put his reputation on the line and called the exact bottom of the S&P 500 just days before it bottomed out on September 30th, 2022. Or what about his epic call in February of this year? He predicted the top of the market was going to be on February 28th, warning his followers that a sharp drop was likely coming. And as you know, that's exactly what happened. The markets tumbled more than negative 20% the following days, marking the worst flash crash since COVID. Remember COVID? But Jeffrey's bold predictions aren't the only thing that's helped him rack up over $1 million in verified trading profits. He also utilizes multiple trading strategies that are absolutely crushing it. Like this one ticker strategy with an unheard of 100% win rate on 86 trades. Can you imagine going 86-0 in anything you've ever done? That's insane. Or his automatic trading algorithm that's averaging 6.3 wins per day on autopilot with a 74% win rate. And it's these strategies, along with a few others, that have helped several top traders hit major milestones in their accounts. Donald said he started using Jeffrey's day trading system with a $10,000 account, and it's now up over 400%. Denise said, I am forever grateful for discovering Jeffrey Turnmeyer. Over the last 4 months, I've been able to turn a $400 Robinhood account into $8,000 just by following Jeffrey's advice. And Ed wrote us that he's up over $100,000 thanks to Jeffrey and his strategies. Robert T wrote in to say he's nearly doubled his account. And Jerry had his best trading day ever, over 30K in one day.
That's a big one right there.
That is a big one. That's more than $1,000 on each trade, but it's still amazing. And what might be the best one yet, David A, unfortunately my last initial is not A, bought himself a brand new Corvette with his winnings, thanks to a 227% year-to-date return. That's on everything year-to-date. Wow. Now, of course, that certainly isn't a typical return that everyone should expect to make. As great as all those top stories are, they don't even hold a candle to what Jeffrey is going to share with us today. A new way to target high-frequency income up to 3 times per day. And everything from the entry alert to the exit is fully automatic. I love the little CashBot robot guy. With that said, Jeffrey shows us how all this works. And before you take it away from here, Jeffrey, I know we have a lot of questions going on in the chat. I just want to say we will get to them at the end. So keep putting your questions in there. It's fine. Just give us some time to get to them. But why don't you take it away from here, Jeffrey?
Yeah, I want to thank everybody for taking their time to be with us here today. I'm hopefully going to make it worth your while. David, thanks for being with me. Nate, thanks for giving me the opportunity. I want to share this with a ton of people. And I want to thank all of you for taking your time to be with David and I and Nate and just, pay attention to this stuff. That's why we do it, is to try to help you. Today, I'm on a mission to show everybody how straightforward it can be to automatically target these trades in the market, with $250 on expected income with $1,000 risk several times a day, potentially. As a matter of fact, all you have to do, take a few seconds, literally. I have a video that shows you how to set the entry and exit, and it took less than a minute. Once one of these alerts comes out, and when everything works out, you just watch it close out automatically a few hours later. You don't do anything. You just get the alert, and you're like, oh, cool, I made money. It's all thanks to a brand new trading engine that I call the CashBot, if you haven't caught on yet. That's what we're calling it. Now, to set the stage, CashBot isn't like an old-fashioned indicator. It's no platform. You don't have to install anything, nothing like that. This is a high-frequency income engine that I designed to exploit a timed advantage in the option market. And then it packages up all the details in a straightforward, easy to follow along automatic alert with everything you should need to do to place a trade on the go. You know, there's no charts, there's no analysis, there's no pulling up anything. You just follow right along if it looks good to you. So instead of sitting at your desk, using indicators, trying to hunt down watch lists and find the next great thing, and then try to decide the options and this and that, I mean, it's a lot. It's a lot. You can just be at the gym, pumping out some iron, getting some sets in, and get the alert and push a few buttons. Maybe you're out walking the dog and push a few buttons. Maybe you're just doing the stuff you love to do, hanging out with David on the beach down there in Florida, and get the alert.
I used to be that thin.
These things are virtually there for you wherever you are, and they work for you like clockwork. For example, August 11th, this thing would have hit your phone right at 9:32, just after the market opened. Everything, all the details you needed, which ticker to trade, which options to do, all the details. You could have pushed a few buttons, gone about your day, and just 3 hours later, close out the trade. Automatic income right in your brokerage account. That's pretty sweet. The very next day, 10:50 a.m., this one kicks off. Maybe this time you're out to brunch with a friend. And you pull out your phone, you get in the trade. Later on, a few hours later, $235 cashed out. You didn't even have to sweat it. How about the next day? Bzzz, got that alert right in your phone, 2:54, a little later in the day. Spent about 2 minutes getting in and setting up all the details. It's about all you need. And then even though the markets were flat that day, this sucker cashed out the next open, $356. Pretty sweet.
Well, Jeffrey, between those last 3 alerts, which happened back to back to back, that's a total of $907 over the course of 3 trading days. Not timing the exits, not staring at screens, just clear automatic signals sent straight to the cell phone or the laptop every single day. So tell us, how exactly does this work and what makes this trade so consistent?
Yeah, you see, it's all thanks to this timed advantage that's built into the options market. And we're going to get more nerdy on this in the details here in just a minute. I talked about my, in the beginning warm up there, I talked about how this breeds my 100% win rate strategy with my algorithm and comes up with this. It's this 86 wins in a row without a single loser that really kind of sets this algorithm on fire. Now, before I dive into all that, let me first start off by saying having a strategy that gets you in and out fast, regardless of market direction, that's probably absolute critical right now. All the tariffs. I mean, the government's shut down, right? And we're still getting tariff news. Over the last few weeks, we've seen concerning economic data like personal spending just started falling off a cliff like a lemming. The unemployment rate still ticking higher, even though the BLS isn't going to tell us any employment numbers until the government's back open. And right now, stocks are the most overvalued they've been in pretty much all of history. The last time we saw stocks at these levels was the dot-com crash. And here's what came next. A multi-year bear market of 0% returns for about 8 years. And that went right into the great financial crisis for another 6 or 7 years. The time before that, this was a little before my trading time, 1970s stagflation. You hear stagflation in the news, right? That's inflation with a stagnant kind of economy that's not really growing giant leaps and bounds. That's kind of what we got right now. And look at the market action. 3 major big drops, 0% return over 12 years. Now, again, I'm not trying to be a doomsday kind of guy here. I'm not trying to tell you to sell your stocks and only do this, but there's some legitimate reasons to be concerned about where we might be headed over the next decade. Now, I don't have a crystal ball. I got a bag of unicorn dust, and I sprinkle it on the market every time I can, but there's no certainty here what comes next. For certain, I mean, I make my best guess, but there's no certainty at all. Here's what I do know, though. Nobody wants to see this happen for the next decade, right? You don't want to see this drop and then this recovery, and we're just back to scratch after 10 years of lost